Yes, indeed, it's it's quite a good experience right now being in China on vacation. Got an opportunity to check what is happening on the ground, and actually here, I think at least in Beijing, everything has been back to normal for quite a long time. It's not just back to normal, and if just looking at the recent general custom data in November, the general product exports, including every goods in China, actually has been seeing a record high of around 20% year-on-year growth, which showing that is quite a kind of good momentum in China. But on the other hand, we are seeing that there's also some kind of downside for the demand growth or a plateau for the growth in China in the coming month. And primary reason behind that is one of the key reasons is because of the kind of appreciation of RMB. As you could see that in the past at least 5 to 6 months, the RMB has appreciated by around nearly 9%, which is quite a significant number for those small or medium scale producer in China, which will definitely give more downward pressure to their growth in the coming month.
In terms of the sort of strong finish to the year, we saw a little bit of a lull in China buying in October. Are we now seeing the momentum back to the sort of highs that we saw earlier in the year?
Well, for the crude, because right now we are already standing at the beginning of December, and the November loading has already been finished. And so far as we know that crude oil buying by Chinese buyer in November is very positive. We are seeing huge kind of a very significant increase of spot premiums in the physical market, not only from by Chinese buyer from Middle East, but also from the West African continent, but also from Norwegian oil. So, and one of the key reasons is about some Indian refineries in China. They want to maximize the usage of their crude oil import quota by the end of year end in order to avoid being cut by the next year. And having said that, so given and also on the other hand, a lot of Indian refineries actually they had already exhausted their import quota like at least 2 to 3 months ago. And meaning that when we are starting into January, and right now, actually, they are already starting to buying the January or February loading cargoes into China, which is also very positive to support the price recovery.
Omar Najia, Global Head of Derivatives at BB Energy. Omar, good morning. Monday morning quarterbacking, as the saying goes in America. The OPEC finally, we had white smoke. They delivered a deal. How do you review it now? Where is WTI headed?
Morning, Sean. I think basically same as last week. So trend in oil is going to be higher. Trend in equities is going to be higher. You're going to have people who will tell you that, Chinese data is unbelievable and they're massaging it and all this kind of stuff. But, at the end of the day, I think the direction is clear. So if you look at the S&P, immediate short-term targets at about 37.85, and if you look medium-term, then you're looking for really big numbers like 4,600. So I think you've got a lot of scope for the market to rise. Now, I'm not telling you that those are value numbers basically, or that you should go ahead and be a long-term investor, all that kind of stuff. But I'm saying that the market, I think, is going to go higher, long-term, short-term. Trend is up. On oil, same thing. WTI is trading about 46. Last week, people were like, no, it's going to come off, blah, blah, higher. We might get a little pullback, but pullbacks are buys. In other words, dips are buys. And I think, we're going to get, I think, immediate kind of term, we get to maybe like 47 and change, pull back $2-3, something like that, then considerably higher. So I think higher on oil and higher on equities and higher on Bitcoin and lower on gold.
Higher, higher, higher. Sure, it's a great old world. Just hand everybody a printing press and we can all make lots of money. Rustin Edwards, Head Fuel Oil Procurement at Euronav. Given everything is so positive, ultimately, should OPEC have gone the whole hog last week instead of this incremental 500,000 a day, which the market seemed to have digested like a salmon in a river and spit out the hook and kept on swimming? You're on mute, Rustin.
Sorry about that. I was just
No.
looking at my order for bull hats to hand out to the people on the call today.
Okay.
No, I think OPEC probably did the right thing going on the middle of the road with a gradual increase versus a full increase, because it gives them flexibility to make changes month on month, depending on what happens. I mean, we're still in the midst of COVID lockdowns. COVID lockdowns haven't gone away. They're actually increasing in the US as we go here into December, Italy as well. And that's going to be something with us for a while, even though the vaccine is being distributed in Russia, being distributed in the UK. Hopefully this week in the United States, Pfizer will get the green light to start administering to frontline workers there. It's still going to take 6-7 months before you get a massive amount of vaccinations done, where it's going to impact people's lives and start opening other things back up again. So I think this incremental step and monthly monitoring is probably the right way to go.
Zhuwei, we saw the as you articulated, and Omar, the sort of the China narrative is obviously quite positive. Asia in general has been a positive narrative for a while, but the US and Europe continues to have big struggles with COVID. Even as Rustin indicated, the vaccine is on its way. But ultimately, my question is the market recovery anchored more in sentiment than in tangible demand recovery? Is there still a gap between those two things? And does tangible demand need to show itself in order for these prices to sustain?
Well, for Sean, I think in terms of the demand recovery, right now we have if just looking at the recent announcement of January official selling prices by Aramco, I think it's quite a good reflection of the recent market sentiment, which is about increasing the OSP to Asia, keeping some of the OSP to Europe unchanged, while reducing the OSP to America, which is kind of good reflection in terms of the degree of demand recovery globally. Looking forward, I think instead of just focusing on the demand, which definitely is very important, on the other hand, we should also not forget about the compliance risk, and as well as for the supply recovery from all of the uncertainty risk in the Middle East as well as in the other regions, which I think will definitely play also a very key important role in terms of impacting the price recovery at least in the first quarter or the first half of next year.
Omar, with all markets moving positively in somewhat of a herd move, one might say, is there anything that would be something to be cautious about that would identify, I mean, weak dollar, the COVID pandemic in the US, shutdown starting, I mean, California, the biggest economy in America, is now practically in shutdown mode. What do you think becomes a slightly red light of concern on this upward trend?
Look, I think basically to understand, I mean, what is a bull market, right? The bull market doesn't start by looking at data and saying, demand is here, and so demand is not growing, so I'm going to sell. Bull markets or trends are made because basically people are anticipating the market. They're looking forwards. They're not looking at data now. They're looking at forward. So if you look forwards with the information that you know now, things could change, but with the information you know now, you've got a vaccine, you've got whatever. So it doesn't matter 6, 7, 8, blah, blah months. You're going to be buying. So people will front run and will buy now, because from the information that's in the market now, you are forecasting that the market will rise further forward. So it's not, what the demand is now, or is California closing or whatever. Further forwards in time, given that the market is trading, let's say at $50 today with California shut, if California opens, and I think as a bull that California will open, that 50 is going to be 52. So I will buy today. The thing that could blindside the market would be if some new bit of information comes along, which I can't think of what it's going to be right now, because we've had a pandemic, and unless we're very unlucky, we get another pandemic. But apart from that, it looks like markets want to rise. In terms of the dollar is, I think, on its last legs. in terms of the fall. It's been falling for a while. It's going to, in my opinion, contrary to what a lot of people that will tell you or that you read from banks, I think the dollar is going to go higher and considerably so. We wait and see. But I think markets are positive, trending higher. On OPEC, again, you see, they do what they do. People don't take a blind bit of notice. And still we have to insist that, what will they do and will they think and are they this and are they that? And the market just ignores it and whoosh, goes on its merry way.
Rustin, there's been a surge in shipping and tankers moving towards China again. We talked about this a few weeks ago. What's your own update on that and where the tanker markets are at the moment?
Well, tanker markets have been on the ground, beaten up pretty well for the last couple of months. Suez rates, VLCC rates at all-time lows. But they are starting to trend higher. We are starting to see more longer haul freight pick up, which is always good for the ton mile perspective and getting volume out of the market. The OPEC deal takes another 24 VLCCs back into a rotation, which then extends ton miles even further. So all in all, we're looking at a more positive Q1, Q2 than we had a couple of months ago. And I think that the market's anticipating that as well, thinking there's going to be more crude released out to the market going forward. I think the one lag that's happening is the fact that U.S. production, despite the move in TI, is still not quite picking up again. And I don't think personally that's going to happen for a while, as they still need to absorb all the bankruptcies and the reorganization of the oil patch in the Permian and the Eagle Ford.
Although we have seen the Baker rig count climb now for practically 10, 12 weeks in a row.
Yeah, it's been going up, but still it takes about 6 weeks from new rig to where oil production starts to flow. So you still got a good month and a half before we'll start seeing impact of these new rigs start impacting the actual volume of production in the U.S., which then will net impact the exports.
Zhuwei, we've seen here in the Middle East, of course, the fiscal situation become quite stressed on the back of the collapse in prices and now the recovery, to the point that Rustin is talking to there, and the output from OPEC last week has left a gap of opportunity for non-OPEC plus countries to come back in and fill this new opportunity at $50 oil. How do you think that plays out going forward, shale in particular?
Well, looking forward for the non-shale oil producer, primarily for the shale oil in the U.S., as well as if just looking at other countries like in Brazil and Norway. Actually, in the Q4 of this year, actually we are not seeing significant, especially for the Brazil and Norway, we're seeing kind of a slower recovery than we expected in terms of due to a lot of maintenance in their production. And looking forward in the first half of next year, as we see that a lot of bankruptcy in the U.S. shale oil producing countries, companies actually has already caused a lot of irreversible damages to let them to recover back to the pre-COVID-19 level until maybe the full Q of 2021. And having said that, I think even that given the OPEC deal we have been achieved last week has give a kind of gradual increase of oil production from OPEC plus side, but on the non-OPEC plus side, it takes a longer time for them to fill the gap finally.
Zhuwei, I just wanted to touch on the decision or the announcement last week by Platts to indicate that you've opened a consultation with market actors on embedding WTI as part of the Brent basket. Would you like to just give us a brief on what your thinking is there?
For that, Sean, I'm really very sorry to tell you that.
Okay.
Because in Platts we have a lot of different kind of jobs and functions in terms of analytics and pricing. Okay. Having said that, I think it's much more appropriate for my colleague Daniel Collov to give you an answer to that.
Okay. Well, let me ask you an easy question then. What do you think the reaction in China will be to the sanctioning of the Chinese National Oil Company and that sort of move by the U.S. towards that sort of more robust business commercial engagement on the energy sector?
Well, in terms of the sanction that we have been seeing recently in the market, actually, it does not give a significant amount of pressure to the trade activities in China, as we have been seeing this year. That looking forward, definitely, I think some SOE state oil companies and also the other companies related in those kind of sanction lists, definitely they are under the pressure. And I think it's the status right now is still quite uncertain. I think it's depending on a lot of criteria, which we do not know for the current status. Yep.
Omar, looking across the barrel as we see the crude rising, will we see all parts of the barrel rise as well? Or distillates still struggling? What's your outlook for that product side?
No, so distillates are a sign of a good economy. So distillates are used in like stuff like tractors and transportation in general. So distillates up, gasoline up again because of vaccine people, etc., jet fuel up. So if you remember, I don't know if many people are listening to the call remember, maybe like 3-4 weeks ago I was saying that we were buying margins for calendar 2021, and we were paying something like $5 a barrel for them. So the margin is what a refinery kind of makes in terms of one crude unit in, and they get like 0.7 of distillate, 0.25 gasoline, and whatever, and point something tiny jet. So those margins have gone up considerably. So in other words, we think that it is not just basically crude. Crude is the most liquid. Crude sees the most participation because it's the easiest thing to buy and to understand. But product is where the issue is. Product is what storage is all about, not crude, products. So if you want to have a market that's healthy, that's backwardated, as opposed to contango, backwardated, it shouldn't just happen on crude. I mean, it's good that it happens on crude because it's showing that demand is there to process that crude, but it's the products. And once that product becomes backwardated, products then come out of storage, and you have basically, hand-to-mouth kind of thing with prices, which inevitably leads to them going higher.
On the scale of open interest on crude, Omar, are we seeing a big return from the funds, from the financial institutions, the sort of trading actors coming back to this market now?
Yeah, definitely. So if you look at the market, you've got the physical market, which is like the stuff to do with OSPs and physical trading of crude, if you like. And then you look at the futures, paper, whatever you want to call it, market, derivatives market. And that's like massive. That's like, that's like a normal building compared to Burj Khalifa. It's like night and day. So that's what really drives
and that's
the oil market.
That's a big part of this sentiment now, isn't it?
Yes,
I mean,
absolutely.
Is the return of the financial players to the oil market.
100%. That's why sentiment, that's why front running, that's why looking forwards is where it's all about. So in other words, you could be right and you could be betting like your $1 and putting it on the table. The other guy could be wrong, but he's going to bet 1,000. You see what I mean? So that kind of dampens you, trumps you, whatever it is, sweeps you away. Eventually you could be proved right, but by that time you've already lost your money. So that's why sentiment, forward looking, the cash that comes in is from these players, whether they be banks or large speculators or whatever you want to call them, but nothing to do with the physical market, nothing to do with hedging, nothing to do with, not nothing, but very little to do with, demand is here, supply is here, there's so many vessels on the water and all that kind of stuff. All that kind of stuff is very interesting, but what drives it is belief.
We saw at the beginning of this crisis that fund that got caught on the wrong side of the WTI trade and was collapsing, because they knew very little about the business. Rustin, let's just think about what's happening in Europe today and tomorrow. We are on the doorstep of a possible Brexit collapse. I'm wondering, does the market even care about that? And other issues in Europe, Germany indicating their lockdown could extend into the new year, and so on. Other surprises, other areas of concern within Europe.
Well, I mean, it's been an interesting week last week with the internal European strife around ski resorts, which is kind of indicative to the whole COVID. You know, Switzerland has decided to keep ski resorts open. Italy, France, Germany have closed their ski resorts for the time being because they're afraid of having super spreader events, which happened the same in the springtime earlier this year. But it's got to the point where, you know, the French are putting border guards between France and Spain to keep, or France and Switzerland to keep the French people from coming across to go skiing. So it is, you know, people are still being very cautious around how things are looking. I mean, Brexit, I really don't know much about what to say on that one.
Except it's been going on far too long. It's sort of like the Dracula you can't kill unless you stab it right through the heart. Let's go to the survey question this morning and see what the view on the room is with this sort of upward trend that we've been thumping on the call today. Oil prices have closed up 4 weeks in a row. Will that trend continue this week? A simple yes or no on that. Will oil prices continue to rise this week? It seems nothing is in their way. Zhuwei, one thing that's sort of continues to be a will they, won't they thing is the U.S. Congress coming together around a stimulus package. There does appear to be a sizable, although not, you know, a compromise, if you like, on the table, a little less than $1 trillion. What is your outlook for that happening, and how important is it to the market at this point when, as Omar says, sentiment has just moved past these things?
Thank you, Sean. I think in terms of the stimulus packages to be announced by the Congress, I think it's definitely will be boosting part of the demand recovery back in U.S. But on the other hand, we should not forget about the mounting confirmed cases COVID-19 in the U.S. As we know it, like 2 days ago, most of California has been shut down for around 3 weeks. And those kind of damages that we had already seen in other parts of the world actually has caused huge amount of downward pressure to the economy, given in the status if the people are not allowed to open their shops, if they are not allowed to move around, no matter what kind of packages is just sitting there, I think it just takes time to be translated into the real demand recovery in the U.S.
In terms of the Chinese view, the progression of China, it seems that the exports are still growing and demonstrating a real robust health, even though the European and US economies are looking at double-dip recessions. How are those two things coexisting now?
I think that one of those kind of asymmetry of the very booming exports in China vis-a-vis the withering imports, withering trade activity in the Western countries, I think is largely due to a lot of industry. Actually, China, due to the very healthy economy recovery in the second half of this, actually has been helping to fill the gaps of a lot of trades in a lot of industries globally, and that actually is one of the key reasons why we are seeing so huge amount of increase of the total goods exports, for example, in November. But as I said, looking forward in the next few months, given the huge amount of pressure, appreciation of RMB, and also as well, because in China actually is not everything is okay. There's also a lot of internal kind of economic uncertainty, such as the kind of debt levels and those kind of other issues also will, pose a lot of downward risks to the economic growth. However, just compared with the other parts of the world, definitely I think in the very midterm, China's economy will still be very, the momentum will still very strong, but it definitely will not be as strong as we have been seeing in the second quarter. We're seeing huge amount of year-on-year and month-on-month growth in terms of oil demand, as well as for the economic activities in China.
Zhuwei, just anecdotally, when you go out of, you're in Beijing, I believe, do you have to wear a mask? Are there any COVID protocols at all left, or are they all gone?
Well, in China, in Beijing for now, actually, if you just go into shopping mall or just walking on the street, I think 95 or 98% of people I met, actually, they are wearing the mask, no matter they are outdoors or indoors. So I think it's just the kind of those kind of self-disciplineness actually has helped to help China as a kind of country with more than 1.4 billion people actually to successfully rein in the infection of COVID-19. But in terms of mobility, definitely not right now in China, we're still seeing kind of downward pressure or kind of constraint to the demand recovery fully to the pre-COVID-19 level because of a lot of the international flights, as well as even for the regional movement, for example, from southern part of China to Beijing. Actually, if you are coming from Hong Kong, for example, where the newly confirmed cases are still rising are at around 100 or 200 per day, people are needed to be centralized quarantine in the hotel. If you are moving from Hong Kong or from Guangdong province, which is also related to Hong Kong, to Beijing. So, and those kind of restrictions policy, although it's very marginal, definitely plays a role to further constraining the demand recover back to the pre-COVID-19 completely.
Okay, Rustin, your thoughts for the rest of the week? What you will be watching Monday morning now in Europe opening?
I mean, today, be looking at the U.S. Congress as they work on the stimulus package. I mean, $900 billion is, in my mind, going to be another shot in the arm. It's going to push markets higher. Everybody loves free money. Let's put some more out there. The other area that I'm watching is the Kurdistan region, where the PKK and the KRG seem to be having some internal strifes, which could put some hindrance on Iraqi crude production, but we'll see what happens there.
Okay, let's have the survey result before Omar gets the last word this morning. The oil prices will trend, continue this week. It's sort of a 50-50 there, 48% yes, 52% no. So it's kind of, the room is split on that as to whether this trend continues. Omar, your closing thoughts and outlook for the week?
Look, I think basically, if you look at both markets combined, the S&P and oil, it's not that they're correlated, but a feel-good factor of one gets reflected in a feel-good factor of the other. So is oil leading the S&P? Is oil, a marker for the real as opposed to the equity economy, because it reflects demand? But the bottom line is, if we're right and we think that the markets are going to rise, then they're not going to do it like from 2 months away. They're going to do it fairly soon. It's not like I can tell you it's going to be tomorrow at 10:35 in the morning, but I'm saying fairly soon. So if you are going to get long, or if you are thinking about getting long this market, get long, whether you want to get long now or whether you want to get long if it dips a little bit, whatever. But if we are right, then the strength should manifest itself prompt, not 2 months away.
Prompt and not 2 months away. That seems to be the Christmas gift. Santa Claus is here early and he's going to keep on giving. So, Rustin, thank you so much for your insights and contribution today. Zhuwei from Beijing, thank you so much. And Omar in Dubai, all the best. And to our 50-odd voices, our listeners today, thank you for your time. We'll catch up with you later in the week. All the best.
Stay safe. Have a good day.
Thanks, Rustin.
Thank you, Sean. Bye.